Good morning, traders, and hello. Happy Monday. It's 8:08 a.m. Chicago time on Veterans Day here in the U.S. on the 12th of November 2018. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. First and foremost, I want to just take a moment to thank the veterans amongst us, those in your family, those who are your friends, and those who served in the past and have perished. We thank you for your service and the freedoms and opportunities that we have. Um, I'm going to start out by saying that the general sentiment today is risk off. We are below where we closed across the indices. The 10 years and the dollar are up. The bonds are up as well. The Eurobond. The DAX is way off. It's down 1.3% or 150 points. Euro stocks also off, but slightly, 19 points or 0.62%. The Nasdaq's down 36 points or 0.5%. So in general, coming in, risk slightly off. Crude oil is strong this morning or stronger this morning, trading at $60.89, up 70 cents or 1.16%. Looks like just a small bounce on this just rip-roaring push down in crude. So that's how things are shaping up this morning coming into this session. Again, it is Veterans Day, so this means that the banks and the bond markets, the cash bond market, are closed today. And so, actually, I shouldn't have mentioned the treasuries because they're closed, but the rates, FX, the interest rates, the FX pits, and the cash bond market are all closed today. We don't have much on our calendar. Today is expected to be a holiday type trade. We do have Fed Speaker Daly at 2:30 p.m. Eastern. We have ECB speaker also at 10:30 a.m. Eastern. So today's one of those days where you just kind of bide your time, and it's likely to be a very, very quiet session. So try not to commit too much today. As far as what we expected on Monday in our review segment, Monday we were looking for the two primary scenarios were looking for lower. The first scenario was looking for a push up into 2804, potentially 2800, 2804 for a drop into 2779. Pretty conservative expectations for Friday. The secondary scenario is an open test drive down that would also take us to 79. The tertiary scenario is a push down, an open test down, push up, and continue the launch that we had, the initiative launch we had on Wednesday. So overall, it's just it didn't quite work out the way we expected. We had scenario 2, but it pushed a lot farther than expected. I'm on my laptop here from home. My daughter's sick today, so it's a little slow refreshing, demanding a lot from this little machine. So here's what we got. We tested up, we pushed a tick into the prior day's range right up here. That gave us the opening swing high, and then we extended the opening swing low down, pulled back to mid. Look at that beautiful mid test for another continuation, pulled back to mid again for another mid test for a beautiful continuation, pulled back to mid and through into the stock zone for another mid test and continuation. And that's basically what we had on Friday. We had range extension down, and and we pushed into the gap zone. Remember, this is a gap zone that we partially filled from the 7th, and we pushed into the mid of the gap zone at 67.50 for a bounce back here, and then we pushed even farther through before we return to the IB. And for those of you who are at Convergent, I cautioned against selling this mid area, even though it's in the stock zone, it's against the IB. I cautioned against selling it as I was seeing signs early on that the buyers are starting to step in, and we had found buyers for the session most likely, and we're likely to push through that mid, and that's what we did. We pushed through the mid all the way back to the opening swing again, and then we had some selling into the close. We ended up with a fairly balanced profile. The value area is valid for today. We finished in value with a point of control right in the vicinity of the mid and VWAP, a total balance day. That's by definition a balance day. So coming into today, when I looked at the markets last night, we were trading and trying to push into that high, the overnight high and the prior session high, Friday's high, are at the same price at 27.95 and a quarter, which coincidentally is the low of Thursday, if you recall. And then we turn around and we were starting to trade lower. We're at 27.73 currently. Let me turn these levels off. There we go. 27.73 with an overnight low of 27.68 half. That's the pattern that we're in currently. Now, let's not ignore what happened last week. Last week, we pushed the prior week's high and close higher. Last week was quite the performance from the buyers. We were able to create initiative gaps on 2 days that we're starting to fill in a little bit, and we're falling back. Looks like we're falling back into this middle balance. You can see there's a very clear low volume node, high volume node, low volume node, and that's the segment that we're in. If we push below 27.50 today, we're looking at 27.27 again. Remember, 27.27, that's been around for a long time. It keeps fluctuating between 27.27 and a quarter and 27.31, and that's the high volume node in this area. And once we push through that 27.27, we're looking at the low volume node down here, which is below 2700. That becomes our next key target. So that's how things are shaking out. As long as we stay above 27.50, the buyers still have a chance at 27.80, and then eventually, not 27.80, 28.20, 28.20, and then we eventually start pushing into the low volume node and the 50 SMA at 28.33. And we start to take back a lot of the selling that occurred in October. That's the big picture. We need to keep the big picture in mind. What happened overnight? What is the overnight chart telling us? Come on, Pewter. To finish off our review segment here, we open up, we test higher, we go right to the prior day's high, which again is Thursday's low. And then from there, we have sellers coming in. The European markets open somewhere in here, and they've just been lower and lower and lower. The profile overnight is showing us multi-distribution. There's no consensus in the overnight trade. We have 3 distributions to contend with here. Looks kind of weak. 200,000 contracts traded, and overall, we seem to be setting up for further selling into this session. Now we are inside Friday's range, and remember, Friday is a balanced day. We're actually now inside of the value area, uh, just barely. The value low is 27.75, 75, and we're currently trading 27.76 and a quarter. So just two ticks. If we become responsive, then we are likely to push back to the point of control 27.82 and test the other side of the range at 27.88. That's what things look like at the moment. Now, I'm not going to commit too much on the open today. Just going to take it easy, given that it's a holiday, and also I prefer to see which side is in control before I stick my neck out. If they're going to take my money because I'm wrong, I'd like them to make an effort. That's one thing I used to mention a lot, actually. It comes from the days of my prop group. I used to say, if you're going to lose my money, I want them to work hard. Don't lose my money by just giving it away, by taking silly trades like trying to sell as the market is roaring up, where it's the momentum is in the direction of buyers, and here you are selling and losing money. That's just an easy, if the market's momentum is to the upside, then it would be very easy to lose money, and that's not how we want to lose. We're okay with losing. I'm perfectly fine with losing. I have to be okay with losing in order to win. It's just a fact. And so to us, it's okay to lose, but just make sure they're working it to be able to lose. That you're getting your money's worth out of each trade, and that's not going to happen if you just uh, make it easy for them to take your money. This morning, open auction as we open inside of the range. I'm expecting responsive buying back towards 27.82, and then I'm looking for a test of 27.88 and the stock zone. This is for me. This is a key sell area. I'm looking for a response there, and then I'm looking for the market to just settle down into the range and trade the range today. That's really all I have for scenario one. I can't see. Veterans Day used to be a holiday on the CME, so it was a partial day, but today is a normal day on the CME. We're not going to close early or anything, but the bond market's not moving. There's going to be pretty light volume, and it's going to be a bunch of interns trading, really. The secondary scenario, open, initiative, push down into this 27.67.75 area, push through into to finish the gap, pull back to gap mid at 67.75 and continue lower as we seek out sellers, as we seek out buyers and continue to move down on pretty light volume. So that's the secondary scenario. But because of the way today is setting up, I also am going to have scenario three. Scenario three is a test down that impulses up and holds steady in the center and just trades the range in the center. That's a pretty tight range, but it can go as high as scenario one. But that's what we're looking at today for in terms of opportunity. Okay. I'll leave you with that. I'm way late. Good luck today, and I'll catch you tomorrow morning. Take care.